Let's move on now. The market is doing not too much, absolutely flat with a bit of a positive bias. But one space has been in focus, which is the commercial vehicle space. Ashok Leyland is the company on our radar. For November, the company saw a 3% year-on-year decline in wholesale sales, while the medium and heavy commercial space declined 10%. To discuss how demand is shaping up here onwards, we have Shenu Agarwal, the Managing Director and Chief Executive Officer at Ashok Leyland, joining us now. Mr. Agarwal, good morning and thanks a lot for joining in. You know, November saw a year-on-year decline in commercial vehicle volumes, not just for Leyland, but for peers as well. I want to understand, was there any kind of one-off impact in November, or do you expect to see this decline continue in the months to come? What are the demand trends looking like now?
No, we think we are very, very optimistic about the industry. I think November was just a blip, one-off blip in the market. I think just a combination of a few factors. I think elections was one where in the states which were undergoing elections, we saw a slight dip in the retail demand. I think it is temporary and it will come back. I think there was some corrections in the retail, in the inventory as well. Yeah, but all these are temporary. December already, we are like already into December and it is looking very, very good. Also, Q4, we are very optimistic about the demand overall.
Can you give us some numbers? When you say you're very optimistic about the demand, what kind of growth do you see for the industry by the end of FY24? And what is the reasonable assumption for FY25, both for the industry as well as for Ashok Leyland?
See, for FY25, it will be too early. I think give us a couple of more months and we'll get back to you on FY25. But for FY24, the current year, when the year started, we said MHCV industry might grow by about 8 to 9%. We are still sticking to that forecast for the year. So far, industry has actually done better than that forecast. But I think overall industry should be about 8 to 9% range in terms of growth over last year for FY24. As far as LCV industry is concerned, we had said in the beginning of the year that it might grow by 4 to 5%, which has not happened so far. But still, we are very hopeful that even LCV industry might come back in the balance 4 months, and we will see a positive growth in LCV side as well.
All right. Hi, good morning, Mr. Agarwal, and thanks so much for joining in. Well, we have Tata Motors over the weekend. They have said they're going to be taking a price increase. Do you have similar plans as well? Are you looking to push through a price increase? Point number one. And point number two, from August onwards, the discounting seems to have gone up. What is the current situation?
Okay, on the price increase, yes, we have heard that Tata has announced a 3% hike for commercial vehicles pricing from 1st of January. We have not decided on the price increase as yet. But yeah, the fact remains that, over the last couple of years, the amount of input cost that has increased, we have not been able to pass it on to the market completely. So there is a need for a price hike. As soon as we take a decision, we will also announce that. As far as the discounting is concerned, I don't think there has been a major shift in discounting in August or after August. I think the discounting levels are quite consistent with what we have seen in the past in the industry. So we are quite hopeful. Actually, what we are actually focusing on is getting more and more pricing power through better products. There's a lot of focus that we are putting on product segments, especially where we are not very, very strong. Yeah, okay. So that is actually helping us quite a lot.
Got it. So you've cleared the air on that front. The other big headline today is about the mandatory cabin AC from October 2025. I want to understand from you, how much can the cost increase go up by on this? And for the industry on the whole, what is the penetration as of now?
See, the cost increase won't be that high. I think it would be still within the range of 1 to 1.5%, right? So industry is actually welcoming this step because it will really help in terms of efficiency and productivity of the vehicles that we have on the road or will be there in the future. So I think it is a welcome step. So yeah, the date is first of October 2025, which is quite far away. But yes, we shall be ready with these new regulations.
What is the penetration as of now for the industry, for your company?
Penetration right now is very, very small. I think it is like less than 10%. Yeah, so with this mandate coming in, I think the penetration would really jump from that time onwards.
Mr. Agarwal, between LCVs and medium and heavy commercial vehicles, what is What is the volume split for you? I mean, on an average, if you can tell us, because on LCVs, I think most are projecting a small degrowth. Although last 4 months, as you said, maybe things will pick up. And is there going to be any change in strategy? And what are some of the drivers that you see for both markets as we head into FY25?
Yeah, so on the LCV side, see, in the long term, we are very, very bullish about the LCV market. Whatever is happening in the country in terms of infrastructure improvement, in terms of consumption patterns, etc. Those are very good signs for LCV market. LCV is kind of a last mile delivery vehicle. Yeah, and therefore that market, as you can understand, will grow leaps and bounds into the future. So although there is a small kind of aberration this year that LCV market is not growing so far, while we are still hoping that it will show some positive momentum going forward in the balance 4 months. But it is possible that LCV market may end up at the same level as last year. But I think strategically, it does not deviate us from focusing on LCV because, as I said, in the long term, LCV is a big play for us. We still have only 20% market share. We operate in a particular segment in LCV. So for us, it is both about expanding our product range as well as gunning for more market share in the LCV.
And how does your own volume split, sir, between light commercial vehicles and M&HCV?
So volume split, it's not right to compare the volumes, but because the average price or the average realization of a LCV would be like less than half of MHCV. But still, the volume split would be roughly, let us say, 70-30, 70 for MHCV.
Okay, since 70% of your business is for MHCVs, let's talk about that business a little more. You were talking about an 8 to 9% overall growth for the industry. What would the MHCV growth be for the industry? What would it be for your own business by the end of FY24? And when do you think you'll get to that targeted market share of 35% that you had guided for earlier?
Like I said, for the current year, we are expecting MHCV market to grow somewhere in 8 to 9% range. Of course, Ashok Leyland wants to do better than the industry, as we have been doing so far. We are at roughly 30% market share right now. We are improving on it as we go along. 35% is our medium-term target, which we want to achieve in the next 2 to 3 years.
Okay, so 35% market share is what you'll achieve in the MHCV space in the next 2 to 3 years. Got it. In terms of margins, I wanted to understand, because, you had given a target of double-digit EBITDA margins in the near term and mid-teens in the medium term. Now, you've already hit 11.2% margins as of the last quarter. By when do you think you'll be able to reach that mid-teens margin level? Do you think you can achieve it by the end of FY24, maybe early FY25 itself?
No, that will take a little bit longer, that mid-teen target. We had said that, again, that would be about 3 to 4 years later. But this year, we are very happy with the performance of our margins. We thought that we will end the year at double digit, but we were very fortunate to have double digit EBITDA margins in the first quarter itself. Like you said, last quarter, we were at 11.2. Of course, the mantra for Ashok Leyland is profitable growth. So we are very finely balancing our market share and profitability aspirations.
Okay, all right. Mr. Agarwal, what about defense? In the first half of the year, I think revenues were around 300 crores, if I'm not mistaken. And for the year, I think you were guiding for 800 to around 1,000 crores. Is that on?
Yeah, that is very much on. In fact, we already have very substantial amount of orders. We also have a very strong order pipeline actually for FY25. So defense business is doing very, very well, and I think it will continue to do so at least for the next 2 to 3 years.
So 1,000 crores is on the cards for this year?
Yeah, I said 800 to 1,000 crores. So we are pushing it to be 1,000, but definitely we'll achieve 800.
What about on EV? You all had plans. I think the capital outlay that we're looking at was around 1,000 crores. You could tell us what is the updated number out there on the EV part of the business, and how do you fund it? Will you look to dilute some stake? What is the funding plan basically?
No. There is no funding plan as such for Ashok Leyland. Ashok Leyland cash position, debt position is very good actually right now. Our debt equity is roughly at about 0.1 to 0.2. Yeah, so there is enough ability to raise capital. Now, for FY24, our capex would be somewhere around, let us say, 500 to 750 crore range. And this includes all the investments that we are doing on EV and other alternative fuels. Now, as far as electric buses and electric light commercial vehicles are concerned, you know that we have a subsidiary company called Switch, in which all the activities related to those two product segments are happening. And that company is being funded by Ashok Leyland itself right now.
Okay. On this topic of EVs, right, there is a news report suggesting that the US is going to back a bid by the government to introduce 50,000 EVs on its roads by 2027. There's a joint $400 million funding that the US and India are looking at together. Can you give us the latest on that, whatever you know, and how will Ashok Leyland be able to contribute to that?
Yeah, see, as far as, I know this is something of sort of a fund that US and India are creating to provide a payment security mechanism for all the GCC contracts that government wants to push to bring adoption of electric buses into public transports. So I think industry has been asking for this for a very long time, and now it seems to be happening. So we are yet to get more details. But I think this is a great step in the direction of adoption of electric buses in public transport. Government has this mission of putting 50,000 buses on the roads for public transport. And I think something like this would immensely help it.
Okay. Mr. Agarwal, thank you very much for joining us. It's a pleasure having you with us here on CNBC TV18. And thanks indeed for taking out the time and coming on.